Good morning, I'm Roy Robertson. This is San Diego Made, San Diego Proud, presenting the business people who help define our community as America's finest city. Brent Wilsey is the president of Wilsey Asset Management, which has helped generations of San Diegans develop investing strategies. And Brent has given guidance throughout a wide range of market cycles. So now, with the stock market near record highs, where do investors need to exercise caution? Where can we still find opportunity for growth? And is the youngest generation of investors even aware of some of the current risks? We've got a lot of ground to cover. So, Brent, let's start with kind of a state of the market. We're up more than 10% year to date. Are we at a bubble kind of pace here? Where are we?
We are, and unfortunately, there are some good buys out there in value companies. However, in the overall market, right now, I believe more than half of the increase in the Dow Jones Industrial is only coming from 3 companies out of the 30.
So what's the risk there? And tell us about those companies and what it is that we need to be cautious about.
The risk is these high-priced companies, they will come down, and people are jumping into the indexes because they feel like it's very safe. They don't understand how weighted the index is. And with the Dow Jones Industrials, yeah, it's up, but it's from Boeing, Apple, and darn it, I forgot the third one. Those three, the 3 of them.
But I know you're also a little bit leery, thinking that there could be a possibility. I mean, we all lived through, well, not we all, but you know, people of a certain age lived through a tech bubble going into 2000. So there's a little bit of an analogy to this year's market, right?
There really is, and I did this back, and again, I've been doing this for nearly 40 years, so that's a good thing about experience. You do have it. But about 20 years ago, 15, 20 years ago, Cisco, I was the idiot because I said Cisco's overpriced at $60 a share. Well, today Cisco's at $30 a share, so it's been cut in half, still 15 to 20 years later. The thing is, back then, Cisco's talked about they would have to have like a router in every single house in the world to meet their growth rate. Well, now we're seeing the same thing. Let's talk about Facebook and actually Google.
Okay.
Right now, they control about 28% of the advertising market, and they're very expensive stock-wise because of their growth rates. Well, if they had the same growth for the next 5 years, they would have 121% of the advertising market. Makes no sense at all, but people don't look at these important factors.
But I know a lot of your model is exercising caution, looking at valuations, doing fundamental analysis. We went to your workshop last month, and that's really what you focus on.
Yeah, but we focus on the realities, not the hype in the market, and that's how people get burned over and over again. I say consistently, the average investor the last 20 years has earned 2.1%, well below what we have done and a good investor has done. You've got to stick to the fundamentals and stay away from the high flyers and buy the chicken companies, buy the insurance companies. That's where you make an 8, 10, 12% on average return per year.
All the solid underpinnings, the companies with great business models that can be trusted year in, year out. And a lot of your model, it's not just about past performance, it's about projections and a lot of work that you put into the analysis.
Oh, it is. And when we do something too, Roy, we're looking at where we're going to be 2, 3, 4, 5 years down the road. We're buying small pieces of large companies. I'm not worried about next week, next month, or sometimes even next year. Businesses go for the long term. That's how you make real sustainable money in the markets.
You say no emotions.
Just results.
Just results, right? And it's about taking the emotion out and learning how to be a smarter investor. Smart investing is the name of your workshops, the name of your radio show, too, right?
Exactly. And that's what we try to do. We try to educate people on how to be smarter. And one thing, too, that we talk now about the kids market. Right now, people don't realize that managers in their mid-30s, they weren't even in the market when there's a bear market back in 2007, 2009.
Right. It could be a potentially scary time. The way to get educated is to attend Brent's workshop. It's Wednesday, August 30th, right? And you can go to Smart Investing 2000 to enroll for the workshop. SmartInvesting2000.com.